Hello and welcome to ET Future of Money Summit. India today is known to be one of the largest growing fintech markets. According to accounting advisory and tax services firm PwC India, the country's fintech market is likely to expand to $1.3 trillion by 2025. But this was not the case in 2001 when CC Avenues launched India's first non-bank payment gateway. In 2016, CC Avenues merged with Infibeam, an e-commerce marketplace, to become Infibeam Avenues Limited, as it is called today. It's now gone on to be the first fintech company to be listed on the Indian stock exchanges and be profitable. I'm Miloni Bhatt, and I'm very pleased to welcome Mr. Vishwas Patel, Executive Director, Infibeam Avenues Limited, and Chairman, Payments Council of India. So, welcome to the show.
Thank you, and hello, everybody.
So first, I want to talk about Infibeam. You just launched something in the market. Can you tell us a little bit about this innovative technology that converts any NFC-enabled Android phone into a point-of-sale terminal?
So, Miloni, before we go into the app, the reasoning is always important. Why this app and why it will make it. So, you'll have to understand the India's digital payment scenario. Like any India digital payments ecosystem is very similar to a marketplace ecosystem. So like if you have a marketplace where you have all the sellers and no buyers, it will not work. Or if you have all the buyers and no sellers, it will not work. So both have to grow together, right? So in India, in the digital payment ecosystem, there is one side issuance and the other side is the acceptance part, right? Just like in the marketplace, buyers, sellers, we have issuance and acceptance. In issuance today, in our country, we are sorted. In a sense that today, if you see, there are more than 900 million debit cards in the market, ATM debit cards in the market. There are around 70 million credit cards in the market, 260 million prepaid instruments in the market. Then there are 100 million plus UPI IDs. So you see, anybody, any Indian can just walk into any branch, say a Tamil Nadu Cooperative Bank also, and open a zero balance account, and he gets a debit card and he gets a PPI. So on the issuance side, we are sorted. Almost everybody, even who are in the anyone above 18 years, more or less has some kind of a payment instrument which can be easily got or has already. So issuance is sorted. Acceptance is where the problem in our country is, right? It has taken years for us over the last 20 years to see today where we are like number one in the world in real-time payment transactions, right? More than even US, China, both put together also. So the way what we have transgressed on this acceptance part is still a problem. We still have a lot to solve on the acceptance and the maximum. Even RBI has a PITF committee, that is a Payment Infrastructure Development Fund, where RBI has put money from its own pockets and including some of our network members who have put in a couple of 100 crores to grow this acceptance base. Now, in this acceptance base today, what do we have? We have this point of sale terminals, where you go into any shop and they swipe the card. Those cost around 8 to 12,000 rupees, and there are only 6 million POS transactions or POS terminals in the market. For a market size of 150 million, SMEs in the market, there are only 6 million POS terminals, right? And why it's not growing? Because, it's a high cost of POS infrastructure. It's inaccessibility of users, lack of technological know-how, difficulty in servicing in far off places in villages and towns, right? They're trying to send them battery problems, sending them printer rolls, all those stuff, right? And imagine giving this machine, and then there are constant RBI regulations where you have to keep upgrading the new security, accepting NFC, accepting Aadhaar, all those stuff, right? So you have to keep changing the machines, right? And plus that, this kind of expenditure, when you have to put a terminal, is that money made in the margin? Can you give it to a street vendor in a tier 4 village or town, right? So that's why it's not growing, right? The second part of the problem is that now post-demon, there are a lot of QR codes that have come in. Now with QR code, it's good. It has made a massive gains, but then that is again limited. When I said that there are 900 million credit cards and 70 million 900 million debit cards and 70 million credit cards, can they be accepted through the QR? No. It's limiting to UPI and other things. So they needed to transgress something where it makes it very easy for a village, for a kirana shop in a village also to start accepting. So with the penetration of 4G and network and mobile connectivity available even down to the grassroots level now, and with even the BharatNet fiber, which government is trying to do at every village level also, fiberizing the villages. All those things now make it easier for the end kirana shop has a mobile phone, right? How
Right.
do you make that mobile phone a POS terminal? So that's why we launched this, our NFC-enabled CC Avenue POS. It's like you just go to a Play Store and just download the CC Avenue app for business. All the kirana has to do is a very instant onboarding with online eKYC and other things, and you can start accepting. When a consumer comes to his kirana stop or say at a food cart on a street or a village street, if the customer gives out his RuPay debit card, he just has to take and tap it at the back of his phone, and the transaction will go through. And there is no amount limitation also, because it is India's first PIN certified, so of course PIN on glass certified solution. So even if it is a 8,000 rupees transaction, you can put the PIN on the glass on the phone, and the transaction will go through. So it's that revolutionary, where no need to go and explain. A kirana store or a fruit vendor can just download from the Play Store, just like how he's downloaded YouTube and other things, and start accepting payments. So that's the kind of revolutionary. It also has QR code. It has an inbuilt sound box also, so that he knows that 100 rupees is successful in multiple languages, and many other features, payment links. And so this is what we are trying to do, if you understand how we can solve this acceptance conflict.
Can you tell us how the offtake has been?
It has just been launched. In fact, 3 days back, we launched it with all the 3 card network heads launching it in BKC. The offtake is huge. The use cases are huge, in a sense that today we are talking to several restaurant owners who has like 30, 40 delivery boys. So we have a user management where each of those boys in their phone can also download the app, and the main notification goes in the parent app, where even the main merchant can see the transactions coming in and all that stuff. So lot of use cases, lot of places that we are doing this. I think that the results will be shown in the coming days.
All right. Okay. Vishwas, I want to talk about Infibeam Avenues. You've been one of the first fintech companies in India to be listed, and one that is profitable. From your vantage, what are the 2 or 3 key takeaways that can benefit young startups, especially today? You were a young startup at one point, especially right now, when money is very tight all over the world. There's a huge slump in the US markets. And of course, the financial performance of some of the startups in India itself, has been really, really underwhelming.
So great, Miloni. So when the going is good, then everybody is very, gung-ho about everything. Small startups with this thing are suddenly unicorns. And now once the tide has changed, then their words start flowing that they are looking to conserve cash. Frankly, it's very sad to see anybody, firing people. It's hard time for everybody on the ground. Like even for the long time, huge amount of money was being printed in the West, and where relocated then sent to India as funding, because the cost of capital is negligible there, right? And when you put all this kind of dump, the problem happens is the sense that when youngsters starts getting access to such kind of money, right, and then the plans and the way they destroy the fabric of a particular vertical. So my take is that any vertical where the VC and private equity comes in, if you see that vertical, the biggest loss maker is the leader of that category, right? And why does that happen? It's because of the very excessive growth beyond what is possible. You're spoiling a lot of things. Like even in a fintech market, if you see, you're going to the bigger merchants and giving them at below rates, right? And if you say that afterwards I will increase the rates above my cost, it's not going to be possible, because merchants once used to that, you start paying employees an obscene amount of money, right? And you try to spoil it. And what happens is now once the times are bad, you're firing that people. Now that person also, the employees also, is now used to a certain lifestyle for the last 1 year, 2 years. They will have to eat a lot of this thing to, then go into a stable company, right? And then go take a hit on their pay scales and even the other thing. So all those things are a problem when it comes to big ticket funding. So The idea here is that has to be a systematic growth. You see the most of the biggest profitable company in our country, which is self-funded, like Zoho or even Zerodha and all those. They have gone ground on ground, build bases long term. Even same goes for us, right? We have, even despite so much. So typically, if you understand, it requires a lot of maturity to go a systematic growth. You need little patience and you need to keep growing. And for us, while the youngsters who have come in, who have become fintech unicorns, are focusing on the top 200, 300 merchants and getting the volumes and able to raise big money, we are actually trying to increase the base. Like today also, when I'm sitting with the team says that in 4 states alone, there are more than 1 million education institutions which are not accepting fees online. For us, that is the market. That's where the change requires. Like, why does that school not accept fees online or through digital mode? So those are the things that we are going after, the long tail, while they keep fighting among the top 100, 200s and trying to break rates and go into losses. So my take here is that there's a lot of patience that is required, that this is business at the end of the day. You have to create value. While if you get access to funding to build that technology, everything is acceptable. But to burn thousands of crores being just in the payments business, right, is not acceptable. And then you suddenly think that, okay, I will burn in the payment business, but I'll become a share broker, I'll become a mutual fund broker, I'll become an insurance broker. So those opportunities lies, but is that money, will that person who's come for you for payments, will they be taking those? Is something you'll have to investigate. So that's my idea, is that have a long-term view. All the big payment companies, be it in US or China, are making good money from processing itself. Forget all the value-added services are a big bonus, right? But processing itself is there. So you start putting in this kind of undercutting and go into thousands of crores in a payments business, which requires only 300-400 people, 500 people. Why should you be doing thousands of crores? So that's a question to be asked in the long term also for everybody.
Do you think these young startups are asking or beginning to ask these questions now?
Sure thing, because once the funding dry ups and then they do all this sudden acts of, firing hundreds of people and then cutting down on their those kinds that you keep hearing in the last couple of weeks, Miloni. So definitely they will be asking it, let's build a long-term sustainable, and ultimately they have to go IPO. And once you are listed, you have to look at profitability. There's no other ratio that works in the stock market, be it earnings per share or profitability. So all of those even listed now as thinking profitably. That's where the real value comes in. Miloni.
Yeah, and how does all of this impact the market and the opportunity for fintech in India in the long term? If you say that we have a lot of these startups or young businesses that think in this manner.
Right. Look, the business can be grown if they focus on the right fundamentals and the right problems to be solved. Right. Today, if you see in India alone, the fintech addressable opportunity, Miloni, is around 5 trillion to 6 trillion by 2026. All reports, be it BCG or all those reports, say it's a 5 trillion to 6 trillion opportunity that is there right now. Today, if you see, cash still accounts for 72% of the consumer spending. Right? There is still 29 lakh crores of cash still in the market. Right? And when you look at all the other associated opportunities also, when we say that is there, it needs, as I give you an example, that there are almost so many million schools and this thing to accept fees online. That's a real problem to be solved, and you need not just give them a vanilla payment gateway, but you have to build platforms that makes it easier for that school to go online within 10 minutes and accepting, where you make the entire horse before the cart and kind of thing that you have to put in so that it becomes easier. So you have to start working on the real life problems. And apart from that, even for the SMEs, today also almost 40% of the MSME credit is through informal channels. Right? Once they become digital, they become credible and they become bankable through when they start accepting digital payments. A lot of things. Today, if you see, India is credit stuff, right? Today, it's around 11% of our GDP is only credit what is there. When you compare to a mature market like US, it's 84% of the GDP. So the right credit way, when you give it on a logical basis, not abrupt, you're given this much amount, this much, but you give on logical, on their reasonings of, say, someone has got a work order, you discount that invoice bill, you give them working capital, you give them to many others consumers who have a fixed salary, and then you want to build that consumer base. Those are the logics that you have to do. You can't go blanket out just to raise some VC money. Get it? So the logical. So even today, our investments, the population, less than 3% of our population invest in savings and equities and mutual funds. Also, if you see insurance, what is our coverage rate? With premiums at just 4% of the GDP, and in US it is 11%, right? So, and all in all, if you see, our country is still the fastest growing economy in the world, right? And fintechs will have a massive opportunity to scale even further. So my advice is that look at these opportunities, look at the long-term goal. Don't look at short-term taking on this thing just to raise money. There are a lot of problems to be solved. We have to fight. Our fight is against that 29 lakh crores. How can we make India a less cash society? That should be the real reason, not to raise money and just grow and become unicorns overnight. That's the thing.
Okay. Okay. Staying with the landscape and the opportunities for digital payments, as per a recent Deloitte report, India is to have 1 billion smartphone users by 2026, and internet-enabled devices in the rural market will also get a push. And you spoke about this, especially with the BharatNet program. Now, how do you see this? Or can you lay out for us how this will further change the landscape for digital payments in India, and what is the scale of opportunities you see emerge out?
As more users grow, the whole key is on the acceptance side and how we can get digital payments is such a thing, Miloni, that if a student is making a payment to his tuition teacher, right, then or tuition teacher, we need to digitize that. Right? When a tuition teacher goes to a kirana, you don't want to go to an ATM, withdraw cash, and then pay to the kirana. The tuition teacher pays to the kirana, that has to go through a direct digital payment, not a via media. To eliminate the cash portion that comes out of that ATM and other things. Once that kirana pay to its distributor, that should be digital. Distributor paying to the manufacturer should be digital. Manufacturer paying tax should be digital. So opportunity wherever, what is commerce? Any product or services delivered or sold and payment made. That payment made is the big opportunity where we have to get. We have to look at million use cases that is there. The smartphones penetration, the 4G and the upcoming 5G and everything is sorted right now. Right? Is a lot of things it will further improve. So what the opportunity is looking at the structure and the infrastructure. Like if I were to pull in my what we do at Infibeam Avenues, maybe that will give you a brief idea how we are thinking through it. So I have shared certain images which you can maybe take them for the users. But if you look at that, what is a fintech universe? As a fintech, what should I look at? How does a fintech earn? Like fintech has three people from where they earn. One is the merchants, like how we go after the merchants and enable them with all the digital technology, whatever that is there required, right? The other part is the banks. You as a fintech develop awesome technology and you give it to the banks, right? And the third is the consumers. You go direct to the consumers and then give them buy now, pay later, and all those other cross-selling services and other things that is there. Now, the first two, giving to merchants as a fintech and a banks, does not require you to be a unicorn or need billions of dollars, right? You can scale very fast. It requires very less to build that technology and very easy to market. You can market it out. You require limited amount of money, right? So those fintechs who are in this space are almost near profitable or making money like us, right? It's the consumer payment gateways who are giving out all this BNPL and UPI ID, like I would say like a phone pay and others, which requires thousands of crores to market to build that base, right? But then they have to give out that credit to the end consumer. This consumer payment gateways is where the maximum money traction is going. So if you are a startup and you're looking at this thing and opportunity of this billion, I would suggest how we are also focusing on the merchants and on the banks right now. Consumer part, anything requires thousands of crores to burn, and there is no loyalty on the consumers. And the merchants, at least when I'm giving the system and they are closely integrated into their system, there is stickiness, there is enhanced margins, and there is other things. Consumer today, okay, you'll give cashbacks and this thing. Tomorrow somebody on another chargeback, new player will come in with a new billion raise, consumers will sip. We have seen like in the last 20 years, so many big websites used to be there, Fashion and You, and so many, I can name at least hundreds who were there earlier, who came discounted and then gone away, right? So from the long-term perspective, this is there. Now from the fintech perspective, as far as a merchant is concerned, you have to understand we have three businesses for merchants, right? We give them platforms, we give them payments, and we give them finance, right? For a merchant, what does a SME, MSME do, right? When we give them platforms, why the platforms? Because we see when I went to, if you take the second image that I have shown, right? If you see on the merchants, what we do today, we have 5 million plus merchants on our platform. When we give them platforms, we have built multiple platforms. Like one of the platforms that you see is Res Avenue for the hoteliers. How did it came about? When I'd gone to a hotelier in Delhi, right? And I said that, okay, ye mera payment system laga do. He said, tera vanilla payment gateway ko main chatunga. I need the whole booking engine on my website and distribution engine to the OTA. That's how Res Avenue came into picture. With that platform today, 3,500 hoteliers can go live within 5 minutes. They're already using it, distributing it to all the OTAs like Booking.com, Hotels.com, Expedia, MMT, Go India, GoIB. All are pulling real-time feeds from there. So in one place, the hotel gets everything, and there is digital payment links embedded everywhere. All the transactions happen. So platforms is like putting a horse before your payments cart. It also becomes a mode. It gives enhanced margin. It gives stickiness. Like for the government, the entire GEM platform, the government e-marketplace, it is a gem.gov.in. If you go to the website, you'll know. Entire central government procurement goes through our GEM platform, which we have built and managed for the government, right? Today, there are like almost 47 lakh sellers on the platform. Last year, PM Modi just tweeted 2-3 weeks back that it did 1 lakh crore in a year, the last financial year. It is about to go to around 7 lakh crores a year, the entire procurement. The whole platform is possible. That's why this business, that's why what it helps is that, there is elimination where, government has passed rules that any public government officer buying through the GEM platform, there is no CAG audit. Right. So that's why it gives confidence to them to buy. He does not have to take 10 signatures of officers. And that's why indirectly it's helping us in the global corruption list where we are improving year on year, even on the ease of doing business and other things that is there. Today, the AIMS canteen, the AIMS hospitals, the Army canteen, KVIC, so many government departments, almost 44 million plus government departments of central government have gone and started procuring to GEM. So it's a platform along with the payments that you build, right, for the government platform. Similar platforms we have given to the JioMart platform, the Jumbo Electronics in the Middle East, Axiom Telecom, Saudi Telecom, STC, many other platform deployments we did. Platform with payments is very important. That way, same like we have done for Bill Avenue for our utility bill payments, where you build the entire framework where we have now 7 lakh agents across the country, all these mom and pop shops across every railway stations in every city and town, jahan pe bill bhugtan kar sakte ho, train ticket book. It all flows through our Bill Avenue platform, which is digitized for them and accepting digital money transfer and everything going against cash. So you put platform with payments built together. Similarly, we have Go Payments, we have many others that platforms. Payments, CC Avenue as a payment gateway, what we are now innovating with the new omni-channel app, which is ours. That is the payments part. Today, we are doing almost like 1,70,000 crores of processing, more than 5 million plus merchants, and it's growing. So it helps collect. And the other side is the finance. Now, when you have data, like when I have a merchant, I know he has to deliver 7 lakh rupees, but he's got the order and this thing. He has got an order. Now he needs money, working capital, right? And knowing his payments history, he has done fantastic. He does around 2-3 crores of payments in a year, month, no chargebacks, good return, no return policy, everything perfect. Based on that data, which is apart from the typical other data that is there in the credit bureaus and others, this data is so intelligent and real, and where we can pull the GSTN data and others and give out credit, right? So we can be a good intermediaries to a banking partner. So something like we introduced like express settlement, where typical payment goes T+2 or 3 to them. Some of the merchants, like this mom and pop in that road, he has to prepay 10,000 rupees so that when the customer comes in, he can do up to 10,000 rupees a ticket. Now, when I give him express settlement, he can do 40,000 a day. Every settlement he requests, I can give another 10,000, 10,000. So he can grow his business. So that kind of lending, plus giving all of these things to this is invoice, working capital, and other things. So that's how we are playing on the platform and payments. Similarly, since we have built all this technology, if you see the third picture that I have given, we do a lot for the banks. Like banks today it's banking itself is such a huge domain, right? So giving end technology, transaction enhancing features to the end merchant is not their core competency. And that's why the fintech banks partnership works wonders everywhere in the world. So typically we have given the entire payment infrastructure to big banks like JP Morgan Chase, even in India, HDFC Bank, ICICI Bank, Kotak Bank. In UAE, it's Masrek Bank, one of the biggest. In Oman, Bank Muscat, which has like 80% market share in Oman, is using the CC Avenue platform. So it's the platform what you have developed. You can give it to the banks and make money on every transaction, every merchant ID opened on them and other things. Similarly, we also do that finance-based disbursement help, because all these merchants want finance, and this guy's main job of a bank is to do lending, right? Take deposit and lend, and that's the arbitrage that they earn. So in this lending mechanism, we play the midwife's role of helping from here to here, Miloni. And last is the NUE payment network. That's something which RBI is coming out with a license with. We have partnered with Reliance Industries and Geo Platforms and two other global majors to be part of the consortium. It is like a Visa and a MasterCard. Today, Visa, you know, in US is like a $500 billion market cap company, more than JP Morgan and Goldman Sachs there in market cap. And what NPCI has done is truly brilliant, but we believe that I think once a private, like in America, there are five networks, American Express, Visa, MasterCard. Why should our country have only one? Diners Discover also is there. Why should we have? And in private also, we can also innovate more. Why should every bank in the world issue only Visa and MasterCard? Why can't they have our branded cards from India issued everywhere else? So that's the logic. That's the big opportunity, how we are playing it. So platform payments, this. So if the fintechs understand that if they are focusing on the banks and the merchants, then they did not raise hundreds of millions of dollars. But when they're going for a consumer, they should be ready to burn.
Okay. Thank you very much for giving us that detailed overview, of the business. I want to talk to you a little bit about regulations. The Reserve Bank of India has unveiled the Payments Vision 2025 document, and that proposes to host innovative payment systems and regulations for big tech, fintech, buy now, pay later systems, and an introduction of the central bank digital currency, among many other things. Now, what are your views on the regulations and the guardrails that the central bank deems necessary to ensure customer safety, but also foster innovation?
So that's the thin line RBI should be maintaining, innovation with, as well as the fostering growth, as well as looking at security and other things. Now, what happens? I'll just give you a practical example. Like, look, after the passing of the Payments and Settlements Act, right, 2007, RBI has become like God for the digital payments, because like they regulate and they keep up. And even if you see in the last 3-4 months or 5 months, when we want to plan something, we say, my people say, me hold on to your horses. Let's look at RBI website and notifications and see what new has come in, and we have to go towards that. Right. So RBI is continuously monitoring. The problem, what I foresee on a personal level, not from the PCI whom I chair or this thing, or in my company, on a personal level, I feel like RBI is like God. They tell us what to do, but they never tell us how to do. And just like in religion, where God says that these are the good 10 commandments or do whatever that is there, it is the mid guys who are there, like the Brahmins, the Maulvis, who misinterpret and create this thing. In this time, most of the times it's the banks and other things. Like, IVR was the best channel. Like when IVR was working, it was the easiest for us. What we innovated in 2008-9, giving that IVR machines, IVR in this thing, very simple. It does not require internet, it does not require a smartphone. Anybody, you just do this IVR, want to make a payment, then just put in your 16-digit card number, OTP comes, you just put in, and then the transaction goes through. It was the simplest, and it could have scaled very well in those days. Then RBI came out with regulations that before every transaction, there has to be a system where the customer is notified. Now, all the banks, just like the God has said that this is what you need to do, a second factor authentication, all the banks put their own thoughts and destroyed the IVR system. Today, IVR is as good as negligible. It's gone almost that way. So what some banks did is that before making a IVR transaction, you should send an SMS to 5778 or 5886. All banks have different codes. And some that after that you do it, you'll get a IVR SMS code, transaction code, which is some say it's valid for 3 minutes, some say 5 minutes. And in one case of other bank, it was 24 hours validity. So all those misinterpretations happened, and then nobody could just do an IVR transaction. And most of the banks stopped sending those OTP or this IVR card for debit cards. Our debit card is bigger because we are a debit society more than a credit society in our country. Right? Jitni chaddar hai, utni philai hai. So India is a debit society more than credit. So all those transactions stop. So IVR drops. Similarly is a case here also when all the regulation that RBI is coming in, right? RBI says that you do this, you do that, like you do standing instructions. It created a lot of problems. Even today, I would admit that it's still not sorted. Some of it. Similarly goes for tokenization. Now, tokenization, RBI said it will be done only by the card companies, that is the networks and issuing banks, right? Now, and they said that this is the deadline, which they extended to last time to 30th of June, that they have to do it. Now, what happens is that the networks and the others get ready during that time. After they are ready, then the acquiring banks integrate, then the aggregators like us integrate, then the merchant integrate. What happens is by the deadline, most of the aggregators are putting their, most of the networks are putting on the deadline, they are matching there. What about the bottom? So if the regulation comes in, if the says how to do, RBI says that this is how you do, the network should be ready by 31st of January, you should be ready by, the acquiring bank should be this. When RBI is putting in certain things, I think best thing is to, make it little abruptly clear and have this. And of course, when even in tokenization, RBI then got all the stakeholders involved, and that did a lot of last minute fighting with everybody to get it up there, right? But still lots needs to be done. And the problem, the good part is that I think little less of regulation and let the market grow will also help innovation. Instead of getting into every aspect of a financial this thing, because we've been growing it for the last 20 years. There are issues, there are systemic risks that can come in if not managed well. But when you try to dictate business with this, that's a thin line which RBI will have to. That's my personal thinking. Again, as I repeat, it's a personal thinking. But however, having said that, the good part about our RBI is that they listen a lot. They're ready to meet anytime. They're ready to discuss on all the issues plaguing it, and they're ready to get in regulations that can help solve this thing, Miloni. So even on all the new things that they want to get in, like this central bank digital currency, brilliant concept in the sense that today. There are use cases are plenty. Like even if a marketplace say that I take 100 crores of CBDC, and then within my ecosystem between buyers and sellers, I will transfer and I'll make money. So buyer, seller, left pocket, right pocket moving within that CBDC is so brilliant, right? Second, look at the other flip side. What are we fighting against? Again, it's a cash. What is the electronic trail to a cash? If I give you a bundle of 2 lakh rupees of 2,000 notes and you transfer it to there's no electronic trail and other things like that, right? So this CBDC, if it is there and is transferred between people, it's much more secure, it's much more this, and there's a paper trail or electronic trail every transaction where it moves. Look at the other things also. Like today, if you look at the flip side, look at the cost of printing currency notes.
Right.
Last week also there was an article where all the small denominations that you have, right? The cost of printing and just the cost of printing is much more than the value of the notes, right? And then again, all the security features, and then there is a problem of fake notes being pumped in by our neighboring countries and other enemies of the state. All those things are also a problem, right? CBDC can solve a lot of problems. There can be an electronic trail transferred securely. The use cases can be massive. As I said, the marketplace might do this between their buyers and sellers and move internally and do it as a currency recognized by the RBI and backed by the RBI governor writing it that bearer of this coin will have this thing, right? There's a government validity to it. So it's a brilliant, and I think lots of use cases will develop once it actually goes live. Similarly, buy now, pay later also, right now, what they are doing and many other things that are doing. I think each has a little problems. There were some aggressive fintechs who were giving predetermined credit without the customer asking, and they finding out and then saying, "Arey, my credit score has got affected because they had already given me one which I was not aware." And a lot of things. While at the same time, if you want to really grow consumer this thing growth, so it's a midway step that you have to do it. And let's see how RBI comes in to come out with this new digital lending norms and BNPL. But all in all, we still have a very active regulator. They mean good, but as I said, it's a whole ecosystem who have to deliver and stand up to their expectations, RBI's expectations, which is not happening. That's why a lot of issues that have gone in the last couple of years in the digital payments is because of that.
Oh, okay. This is my last question to you, and it is linked to buy now, pay later. Fintech players along with the PCI have taken this up with the RBI, and you asked for a certain time to comply. But, given the pace at which fintech is disrupting payments, lending, etc., do you see, you've asked for, perhaps less regulation, but do you see the need for an overarching regulatory framework just so there is no ambiguity for consumers, investors, and fintechs themselves? Something that you've pointed out, there has been a lot of confusion.
I think so. What I know, Miloni, right now is that RBI and its team is already working on that digital lending norms. It's already been announced and that they'll be coming out soon, right? All those ambiguities that we are talking about. It's a new thing, because putting credit into a prepaid license, prepaid insurance, prepaid instrument without the actual customer asking for it, or putting it as a credit line, not the actual credit, but as a credit line, and allowing him to use a PPI much more than the limits are defined based on the credit lines. That was a new thing out of the blue. I'm sure RBI has must be seeing some cases, because it sits at the top of the hill, right? Of the hill. So they have a full 360-degree view of what's happening in the marketplace there, right? They must have found some systemic risk that can disrupt or the way things are, or must have got consumer complaints, or some other thing that must have triggered this activity. Me, on my personal note, I don't know what triggered it actually, but a lot of chatter that you see on Twitter, if a consumer complaining that I didn't have money in my XYZ wallet, I took the cab, and then it says it's already paid, and then I came to know that it's given to me as a credit based on my pass, and then without me asking, or many other things. Those all things, apart from some complaints, must have triggered it. So RBI will definitely now, once it gets in that ambiguity, it's always been like that. When we started, there was no second factor authentication. When we started in 2000, only credit cards were allowed to be used online. There was only a 16-digit card number, expiry date, and CVV, and transaction is to go through. A lot of things have happened, the nodal bank guidelines, second factor authentication, and all these things, even now the payment aggregator licenses. So continues as the fintechs grow, as the e-com markets grow, digital payments grow, RBI will get in and will try to sort it. Only thing is they'll have to manage a very thin line between fostering growth, innovation, and at the same time regulating the whole this wild animal that is out running and disrupting, being the number one real-time payments market in the world now.
And also the wild animal is hopefully RBI will tame it, but it will also ensure prosperity and ease of business, and really be something for India to showcase and strengthen the country. But Mr. Vishwas Patel, thank you so very much for your views and your thoughts and your time today.
Thank you very much, Miloni. Thank you, everybody.